This summer, step into the Mediterranean haven of Malta. Crystal clear waters, ancient ruins, and towering cliffs. The iGaming industry is converging in Malta to take on everything from green courses, the hottest tournament tables, courts, lanes, and of course, the UNESCO city of Valletta for iGaming Next 2023. A week-long festival experience rounding up with the biggest high-end European pool party, Showers, celebrating its 10-year anniversary. Join over 4,000 senior delegates and top affiliates from all around the world alongside industry giants for an unforgettable iGaming festival week. iGaming Next 2023. Contact our sales team for sponsorship opportunities.
Hello, everybody, and welcome to iGaming Next Weekly News Live. There's no Nico this week, I'm afraid. He's off in Dubai. But joining me once again is Mr. Connor Mulher. How are you doing?
I'm doing well, thank you, Jake. How are you?
Yeah, I'm not too bad, mate. I'm not too bad. I'm getting a bit excited now about Valletta, I must say. It's upon us, basically, isn't it?
Yeah, absolutely. It all kicks off on Monday next week. I'm heading over on Sunday afternoon. So quick chance to settle into the island. And then, Monday golf tournament, Tuesday, something else. And then Wednesday, Thursday, big conference day. And then poker tournament Friday, Showers on Saturday. Yeah, it's going to be an action-packed week, to say the least. What are you most looking forward to?
Seeing everyone, to be honest, the whole iGaming Next team who work in Malta, obviously, and also everyone at the show. It's great to catch up with people in person. I think that Tuesday's pre-registration and then welcome drinks in the evening. So, the old banana skin Tuesday where you have a few too many drinks the night before the conference for some people. This is our last stream, I think, before Valletta. So let's make it a good one. You can obviously join the discussion in the chat. We have some exciting M&A to talk about today. Unfortunately, last week, Connie, you missed it, but the chat wasn't working on LinkedIn. So we couldn't have any of our favorite listeners sort of chime in with comments here and there. But we did have a special guest on in Antti Koivula from Finland, who is a legal expert over there. It's a really interesting deep dive on that market and their approach to enforcement and the new licensing system. And if you did miss it because of the technical difficulties on LinkedIn, you can catch that stream, a replay of that stream over on our YouTube channel. So do feel free to do that. Not right now, obviously, because we've got a whole live show for you coming up. Before we crack on with our topics, Connor, I want to say a big thank you to Playson for sponsoring us. Our loyal sponsors, and also to Interactive and to Bombay Live. Connor, it seems like for a long time, and only a few weeks ago now, we were saying how, there's no capital out there, there's no investor capital, and nobody wants to do a deal, and the industry might be getting swept up in this kind of wider recession. But it seems like we've turned a corner the last few weeks. Would you agree with that?
Yeah, absolutely. M&A is back on the menu. Things have started going wild. We've had deals left, right, and centre. Plenty to keep us busy. Certainly, reporting on all that action in the market. But yeah, the biggest one that we've seen recently is, of course, Entain's deal to acquire STS from Poland. Shall I fill in a bit of the background information for you there?
Yeah, definitely. I mean, so this was in the news this week as a £750 million deal which Entain has sewed up for STS. So yeah, Connor, why don't you tell us a bit more about STS for those who might not be so familiar?
Yeah, absolutely. I mean, it looks like a pretty shrewd move from Entain. So STS was established in Poland in 1997, so it's a pretty well-established business. I believe it's the largest bookmaker in Poland, certainly the largest, I think, private sector operator. They do have a state operator there as well, I think. But yes, by revenue, I believe it's the biggest bookie in Poland. They claim to have a market share over 50%. And that's built on their online operations, which account for the majority of the revenue that STS makes. They're mostly an online company, but they also have a network of 440 betting shops across Poland. So it's a real omni-channel operator over there, both online and offline. It's a bit of a I suppose it's a classic sort of local hero company. It's perhaps not very well known outside Poland, but obviously it's a bit of a hero brand there in its local market. It is also licensed in Great Britain and Estonia. So overall, they say they've got over 1 million customers across Europe, but the vast majority of those are in Poland. It's something like 780,000 active customers in Poland. So it's a really strong brand over there and a really strong business. It was listed on the Warsaw Stock Exchange in 2021, but 70% of its shares approximately are still owned by the company's CEO, Mateusz Juroszek, I think. Apologies for my pronunciation, and his father. So they're major shareholders in the company, and they have, pretty much unanimously accepted this offer from Entain, I believe. So as you said, the total value of the deal is about £750 million. That's going to be paid through 450 million in net cash from Entain.
Yep.
And the rest of it will be made up by a 10% stake in Entain's Central and Eastern European operation, Entain CEE. So,
and that 10% stake is being given to the CEO, right? And as a kind of trade-off for his investment.
Yeah, absolutely. And he's going to remain as the CEO of STS, and he's also going to join the board of Entain CEE once he takes up that 10% stake.
Exactly. Yeah, great summary. Thank you very much, Connor. And like you said, STS will now fall into the Entain CEE business. And that is a joint venture between Entain and an investment firm called EMMA Capital, or EMMA Capital. And Entain CE was originally formed last year. You might remember when the company acquired SuperSport, which was similar to STS in that it was a leading gaming and sports betting operator, but in Croatia and not Poland. I think that deal was done for nearly €1 billion. I think it was 920 million euros. So Entain is really sort of splashing the cash in this region now. Entain CE is led by Radim Haluza, who was the chief executive of SuperSport. And like you touched on, Connor, Mateusz Juroszek will now presumably, report into him as the continuing CEO of STS.
Yeah, absolutely. So just if we can just dig a little bit deeper into the price around this deal. So 750 million is the total consideration. That's based on a 35% premium to the 6-month average share price of STS on the Warsaw Stock Exchange for the previous 6 months. And STS generated £121 million in revenue in 2022 and about £50 million in adjusted EBITDA. So it's something like 15 times the EBITDA multiple for last year. I don't think we have any earnings expectations for the rest of full year 2023 to kind of work out what that multiple might be. But yeah, it's probably somewhere around the 10 to 15 times region. And there was some interesting commentary on this from Regulus Partners, who always have something interesting to say on deals like this. They said that while not cheap, a fair price is being paid for a very strong market position, which is hard to leverage outside Poland, but which a global operator can leverage through a combination of scale, portfolio risk management, and regulatory optionality. In short, we see Entain's acquisition as a high-quality, low-risk deal at a win-win price, which is rather complimentary commentary, I think, and probably pretty fair as well. Just going back to what you said about Poland, about the Croatian acquisition, and this kind of statement of intent now, I suppose, that we have from Entain in the Central and Eastern Europe region. Regulus Partners said that Poland and Croatia are visible jurisdictions which had easily digestible components to gain number one market share status. And in that respect, I suppose, this is my commentary now, both those deals were kind of no-brainers for Entain, who've got plenty of cash on hand. We'll get into that in a second, actually. But yeah, who've got the purchasing power basically to go in and snap up these market leading positions straight away and basically, dominate these markets just with a single purchase. But Regulus pointed out that the rest of the region tends to be rather more complex in terms of either scale, visibility, or accessibility. So they've got those kind of easy wins now in Poland and Croatia, and I suppose we'll all be on the lookout to see what they do next over in Central and Eastern Europe.
Yeah, exactly. Just on that, I remember at the time of the Supersport deal that Paul Leyland was worried about how that brand was kind of going to translate into different countries in the region, because I think he said at the time the countries were hyper complicated was the words that he used. But I guess you don't need to worry about that if you're just going to go into each market and basically acquire the market leader and in each of the respective countries. Obviously, that doesn't come cheap, though. So, Connor, do you want to explain a little bit about how Entain has kind of structured the financing of this deal?
Yeah, absolutely. And this is an interesting one as well. They've kind of alluded to something in their near-term future as well, because they're going to end up with some cash left over here. So the acquisition is going to be funded by an equity raise. And in fact, that was announced at the same time as the acquisition was announced, which I think was Monday or Tuesday this week, just a couple of days ago. And then yesterday, Entain put out another release saying that the equity raise had already been completed. So they've raised a total of £600 million from a combination of institutional and retail investors via a new shares placing. So they've placed, I can't remember the exact figure, something like 8% of their total, new shares equivalent to sort of 8% of their total shares. Anyway, all those shares have been snapped up by institutional and retail investors, and they're going to use 450 of the £600 million raised for this acquisition. And the remaining 150 million is going to be set aside for further near-term acquisitions. And that's a direct quote from Entain. So no details yet, but it seems they might have their eyes on the prize again. They might have something else that they have got on their shopping list. What do you reckon?
Yeah, no, exactly. I don't think they're done yet. They've got a proven track record of this strategy. Even if you think back to last summer where they went into the Dutch market and bought the leader there, Bet City, for 300 million. Even harking back to the days of GVC, they were buying sort of Georgian market leaders, and even Ladbrokes Coral, you could argue in the UK was an established market leader there. So no surprise to see they'll be continuing with the strategy that's served them so well. Like you said, it was well received by analysts. We had some commentary from Peel Hunt as well, which said this acquisition is more than just another bolt-on. It adds to a string of smart, diversifying deals and bolsters our confidence that Entain can recycle its cash flow efficiently. Doesn't stop there, though. The news was also well received by investors. And I think we've got a tweet to show you on this, because the Eurotech family not only has shares in Better Collective, but it also is, I believe, the second biggest shareholder in Gaming Innovation Group. And Symmetry Invest, who we've discussed on this show before, is another massive influential shareholder at GIG, and they sort of paid tribute to the deal with this tweet, saying it's an impressive sale with huge cash windfall and a big return for minority shareholders. Connor, is there anything else to add on this topic before we move on?
I'm sure there's lots. To talk about. Yes, I mean, as you say, I think it would be interesting to see where Entain goes next. They're obviously at a point where their technology, of course, it's always developing, but their technology is in place. You know, that when we see their acquisitions, it tends to look like these kinds of things where they're snapping up new brands for the kind of market exposure that they've got in particular markets that they want to go into. I do think it's also interesting to see, when we think about emerging markets, to see, you know, Central and Eastern Europe to be thought of as some of those emerging markets for the gambling sector. There's a lot of talk, obviously, around LATAM and Africa and some of the Asian markets. And obviously focusing a little bit closer to home at the moment and just snapping up those growth opportunities.
They've done a couple of deals recently that have slightly deviated from that strategy. I remember there was obviously the deal for my mind's gone completely blank. There was a deal for an affiliate, which I remember thinking was unusual. And then the other one was Unicorn, when they wanted to branch out into sort of esports and emerging technologies. And I remember they pledged they were going to invest like 100 million quid or something into emerging tech. That's rebranded now, I think, to something under the Entain umbrella. But yeah, those were slightly different. This is a lot more in their wheelhouse, I think.
Yeah.
Just to say, obviously, a quick hello to Elizabeth and to Lars in the chat. And apologies, we've seemed to have been slightly hijacked for somebody looking for a bit of free advertising there. But at least it's industry specific, Connor, and it's not another porn bot like the one that that got the better of us last year.
Yes, it could be worse. Could always be worse.
Exactly. Yeah, so another big deal to talk about this week was announced today, actually, and that was Betson, which has acquired Belgian sports betting and gaming operator BetFirst for 120 million euros in cash. This deal will see Betson enter Belgium for the first time, and it's planning to use BetFirst predominantly for sports betting, while it has also struck an agreement with French land-based operator Groupe Partouche. Is that Partouche? No, there would be an accent on it, wouldn't there? To launch online casino in the country as well. And I think these two deals should sort of definitely be looked at together and not separately, as they've both been done to kind of strengthen Betson's, entry into Belgium effectively. So, Connor, like you did with STS, do you want to talk to us some more about BetFirst?
Absolutely, yes. I think just like most of our listeners, I'm sure, a Belgian business I was intimately familiar with before I was doing my research for this session today. Just get my specs out. Established in 2011. BetFirst is a B2C operator, of course, of online sports betting and, curiously, dice games. Not card games, not roulette, but dice games. Online in Belgium. Not sure what their regulation looks like over there, but maybe they have made a little bit more liberal towards craps and other dice games than they are for card games. Who knows? They also operate a network of 450 points of sale across Belgium and a land-based gaming arcade. Now, I was looking for a bit of information on what these points of sale look like in Belgium. Nobody in the gaming press seems to know. If there's any Belgian listeners, please tell us, what do the BetFirst point of sales look like in Belgium? Are they betting shops? Are they?
I think they're retail betting shops. And I know because I was in Ghent over the weekend and I saw them.
There you go. Fabulous. Thank you, Jake. That's it. He's reporting from on the ground in Ghent, Belgium. Brilliant. Yeah, okay. So they've got 450 betting shops and a gaming arcade. So again, another one of those kind of local hero brands that we perhaps don't know outside Belgium, but that has a strong omni-channel presence there with both the online and the offline operations. Betting shops and press shops, Quentin says. Thank you very much. So anyway, yes, BetFirst is to be acquired for 120 million euros by Betson. That's 117 million to be paid up front and a further 3 million in future earnouts. That equates to about a 10 times multiple of BetFirst's expected full year EBITDA for 2023. Back in 2022, the business had net gaming revenue of about 50 million euros and adjusted EBITDA of about 10 million euros. So not an entirely different deal to the one we just discussed by Entain, really.
Mm-hmm. Yeah, good point. And just to shout out Joe Hatton, you mentioned Entain. He says, Entain preparing for global domination, tailwind signal a long-term strategy for M&A and the market saturation to conquer the world's betting business. Thank you, Joe, for your contribution today. This deal was interesting to me, Connor, because it's Betson sort of trying to strengthen its foothold in regulated markets, whereas obviously their focus recently has kind of been on grayer markets that are still regulating when you think about kind of Peru and Brazil and LATAM. And we've got a really interesting tweet here, actually, that basically points out that strategy. If we can pop that up on screen for you now. This is Kilroy. He says, this spontaneously feels like another example of when Betson takes profits from grey, he says, and gangster, I wasn't going to say that, but grey markets and puts them to work in more stable places like Latin America and now Belgium. This reduces risk in the case and increases earnings per share from day one. Nice. So we've got one happy investor there. And that thread actually goes a little bit further, actually, and says this is a good strategy from them, because a narrative that perhaps we've helped to create is that Betson is kind of the riskier, operator that has a less regulated market approach compared to a company like Kindred, which has a much higher share of regulated revenue. And on that point, Betson's revenue mix from regulated markets in Q1 this year was 36%. And Pontus Lindwall, who of course is the CEO, said that this deal would help to boost that number when he was talking about kind of the rationale for the deal. Belgium is fully regulated, Connor, you were asking earlier, but there is obviously an advertising ban there, an outright advertising ban. And I think this is where the group Partouche partnership will come in particularly handy, because they're a massive French operator, and they've got casinos all over the world in France and Switzerland and Tunisia, but also they've got one in Ostende in Belgium. And I think Betson will be able to sort of lean on that license. And I think they want to help them by providing their sort of online expertise to help them get online, as they're traditionally a retail casino company, effectively.
Yes, in Oostende. Is that where the Belgian soap opera Oostenders is set?
Dreadful. Oh my word.
What's Group Partouche like then? Are they sort of cheap and cheerful rent group Grosvenor?
No.
Are they like Monaco style luxury things?
Yeah, just massive international casinos. I don't know. They were founded in the early 1900s. They've been around for years and they're publicly listed. So looking at them earlier, like you said, doing a brushing up on them before this stream, I got the impression they were a bit of a French sort of MGM style equivalent, but I don't know. I could be completely wrong. If you want to read the story that we wrote this morning on this deal, you can see the QR code at the top of your screen there. Feel free to scan that and read along. What else have we got on this? I think that's about it on the Betson deal this morning. Anything more, Colin, before we round off?
I don't know. Well, you wrote this story, didn't you, Jay? Did you get any detail on what the partnership's really going to look like in detail, or is it just a kind of statement of intent at the moment? There's nothing concrete.
Yeah, so I think from what I gather, Bet First is going to be allowed to run exactly as it was. Like, they're not even going to look at potential synergies until the medium to long term, they said. So management team will remain in place. Betson will keep it at arm's length by the sound of it. The Group Partouche deal was done because they already have a casino license in Belgium. So Betson doesn't have to worry about the regulatory red tape, although they will need to convert that into an online license, because at the moment it's obviously for retail. But yeah, they're the two sort of driving factors behind the deal, I think, and obviously what I touched on earlier, and just improving that regulated market mix, which, pointing to investors is just reduces the risk, doesn't it? Which you could argue makes it a more attractive investment.
Yeah, no, fair enough. I mean, net gaming revenue of 51 million in 2022. So I don't know how big a proportion of Betson's annual revenue that is, although I suspect not a huge portion, but I suppose they're kind of edging towards, moving, just shifting that balance a little bit in the favour of regulated markets.
Yeah, there is one more thing actually that I meant to say, which was that Bet First is also live in the Netherlands, where Betson, as we know, has really struggled to get a license since the market regulated. Now, as I understand it, this deal solely involves Belgium. I have asked for clarification on that and whether they might gain access to Bet First's online sportsbook and things in the Netherlands, and potentially fast track re-entry to that market as well. But it doesn't sound like it from the noises they've made so far. But if we do get clarification, keep an eye on the website, and we'll add a line to the story when we do find out. So those were like the two biggest deals this week, but there are a few others that kind of made the headlines. Connor, I know you covered a couple of them. Do you want to maybe give a little whistle-stop tour, sort of Nico 10 in 5 style of things people might have missed this week?
Yes, I could do a 2 in 5, perhaps. I'm no Nico Jansen. And of course, we can't take his trademark segment, which is of course the 10 in 5. But yes, there was another deal just a couple of days ago on Tuesday. OpenBet, sports betting platform provider, acquired an Austrian AI and fraud detection technology provider, Entain, or Necton, Necton. That is technology business, primarily in the fraud detection space. So OpenBet CEO Jordan Levin said, "We thrive on solving the most complex challenges our industry presents, and OpenBet's acquisition of Necton takes our commitment to player protection and AML to the next level." So it's all about, I suppose it's all about having those tools to detect unusual behaviour, which of course is crucial. We had a fine today, just to link that in. Video Slots had a fine today in the UK, £2 million. Regulatory settlement, I should say, not fine, for AML and social responsibility failures. So obviously a hot topic, something that operators really need to be on top of, is looking out for those signals of unusual behavior. And Necton is one of the tools that are allowing people to do that. So that'll be going out, I suppose, to a lot of OpenBet's customers and being brought in under the OpenBet umbrella. So they've got customers including FanDuel, DraftKings, Entain, Skybet, a real list of massive names in the industry. But the terms of that deal were not disclosed, so nobody knows how much it cost or what it's going to generate. But that was an interesting one. And then we had IGT on the other side of the equation looking for a buyer now. So IGT is undergoing a bit of a strategic review of its global gaming and play digital business segments. So it's the global gaming segment is IGT's land-based slot machine business. That generated $381 million of revenue just in Q1 of 2023. So pretty big business, nearly 400 million a quarter. And Play Digital is a smaller business segment for IGT, but it's their online sports betting and iGaming solutions business. That generated $55 million in revenue in Q1. So both pretty meaty businesses. And IGT told us late last week that it's considering a wide range of options, including a potential sale, merger, or spin-off, as well as the possibility of retaining and further investing in the business segment. So anything could happen yet, but it's kind of put that message out there that it's open to offers for those business segments, and that would allow it to focus on its lottery operations, which is the main driver of IGT.
Exactly. So sports betting assets and online casino assets up for grabs, which always brings about some speculation. And just before we came on air, Eilers and Krychek Gaming put out their weekly EKG line, which I always struggle to say. And they were basically asking who would want the assets. So on the sports, they said, with an increasingly small addressable market for B2B sports in the US, it's hard to see a viable takeout target over there. But they have said that one existing client, perhaps in Europe, would want to take the business in-house because they've got some big partners in Belgium. Think of OPAP in Greece and also Lottomatica in Italy. But they also said that the online casino side of the business is the absolute jewel in the crown and a more attractive asset. And it accounts for 17.4% of US online casino GGR per their game database. So not to be sniffed at, behind Evolution and ahead of Light and Wonder. And they've actually said Evolution looks like a logical option for the online casino assets in our view, as it builds its non-live casino content up in the US. We know Eva have had struggles obviously in that division before, but to be fair, those struggles aren't from not throwing enough M&A at it, because they've already bought 4 or 5 suppliers. Maybe IGT is the missing piece of that puzzle, maybe not, but yeah, speculation. We love that on this show. That's all that is for the time being. And thanks to the guys at Eilers and Krychek, who are probably more informed than us, certainly when it comes to the US side of things. I think, Connor, we'll call it there for today's show. That was a solid half an hour, short and sweet. There's no weekly news next week, as you might have seen on the yellow ticker at the start. Obviously, we're all at the conference, but we will be back on the 29th of July, hopefully with Nico returning and potentially a special guest as well, as we want to do a deep dive on the Dutch market before its marketing ban comes into force on the 1st of July. So if you are heading to Malta over the weekend or next week, please do have a safe journey. Look out for me, look out for Connor. Come and say hello, come and grab us a drink, or we'll grab you a drink even.
No, you were right.
Thank you again, obviously, to Playson and to Interactive and to Bombay. And Connor, I'll let you say thanks to our lovely listeners this week.
Yeah, absolutely. Thanks to you all for joining us. Everybody in the comments, thanks for taking part. We always appreciate it. And yeah, hoping to see as many of you as possible in Malta next week.
Yep, and we'll catch up over a beer too, Connor. I'll see you then. Thanks, everybody. Goodbye.
Cheers. Bye-bye.
Gaming Festival Week, Monday, Tuesday, Wednesday, Thursday, Friday, and Saturday. iGaming Festival Week.